Hi, everyone, and welcome to the show. I'm your host, Micah Blank. Had a fantastic time at Dealmaker Live. I'm still a little coarse from talking. It was so awesome to have all those speakers there. Anyone who's anyone, Multifamily was there. We had over 500 people there. Super exciting to see everybody there. So energizing. And we got these shirts. We got these freedom shirts that we put together and we're solding, and we actually donated the proceeds to support my Uganda mission, which is ugandacss.org. Been doing it for, 8.5 years now. Been there to Uganda twice. But anyway, this is a freedom shirt. Okay, a freedom shirt. If you look closer, it actually has different words inside. Things like passion and purpose, legacy, choices, freedom, things of that nature. So this is kind of the inspiration of what I do, is to help people become financially free with real estate. That's really my passion. Whether you're doing it as an active investor, so if you're finding deals or you're raising capital, you're syndication, or if you're passively investing, because here's the thing, you can achieve the same goal, financial freedom, either by passive or active investing. So this is what we're all about, and really excited to be able to have these shirts at Dealmaker Live. So speaking of financial freedom, really excited to talk with a guest today, Kyle Mitchell. He's actually one of our mentoring students, started about 18 months ago, and has really shown how to leave your job. So he was just radically quit his job, but he also built this platform that allowed him to raise $1 million for his first deal. That's pretty amazing. And his second deal followed literally 3 weeks after his closing his first one, and it's a $15 million deal. Why does he have that confidence? Okay, how has he been able to overcome his comfort zone? He talks about that, and how did he build his platform? And he kind of shares with you the blueprint he went through, which is very consistent with the blueprint that I went through as well, to essentially build a platform that allows you to raise a lot of money. And so his plans is to scale his business, and he talks about how he quit his job and his plans and how he did it. So let's get right in the interview here with Kyle Mitchell. Here we go. Kyle, welcome to the show.
Thanks for having me, Michael.
Well, it's great to have you here. I'm super excited because you quit your job in your full-time real estate. And that's what everybody wants to do. I want to quit my job with real estate. So let's just go focus right on the matter at hand. Was, first of all, why did you quit your job? Because you didn't actually quit your job because you had a bunch of income from these apartment buildings. In fact, you quit your job before you even had your first deal. And it's funny because some people do what you do, but some other people wait till they have the passive income. And some people even wait longer because they're concerned about, oh my gosh, what if it goes away or whatever, right? So they're really afraid to let go. And you're like, screw it, I'm out of here. So why did you choose that route? And then also, how did you architect it? Because there's also a reality of, hey man, I got to cover my living expenses somehow. So you can't just quit your job, and you've got to have a plan for that. So first of all, why did you choose this course of action versus maybe waiting until you had some passive income? And then how did you actually do it?
Yeah, so there's a couple of things in there for sure that went into my planning process, but I had planned on leaving my job for about 2 years before I actually left my job. Now, like you said, I was making $0 from my multifamily company at the time, and I had saved up money for 2 years. I had some savings, and then my wife as well has a full-time job. So we do have a little bit of a, fallback there. But I'm just the type of person that if I'm going to go all in on something, I have to go all in. We had spent about 10, 11 months building our pipeline, educating ourselves. We had started a meetup group. And so it was at the point where we were comfortable making offers and going to the market and closing on deals, right? We knew it was going to be a matter of time until that happened. And if we were going to do that and take our company to the next level, I really need to do it full time.
All right. So you quit your job at the point where you had sounds like some savings. You had the support of your spouse. Was she working, or is she still working at that time?
She is currently still working, correct.
All right. So, and then you saw this pipeline forming. You saw the pipeline of deals and the pipeline of investors. You're like, man, I can do this. And if I just focus on it, I can actually accelerate that. Is that kind of what the strategy behind that?
Yeah, exactly. I think, there's a lot of people out there that do this with a full-time job, and you can certainly do it. But we were getting to the point where I knew that this is where I wanted to go with my career. It wasn't something that I wanted to do as kind of a side gig, and I want to scale the company and get to the point where I'm one of the top investors in the multifamily space. And so to get to that point, I just went all in and said, let's do this right now. It was prior to getting married. We don't have kids. I have a spouse that has an income that can support us for a while and some savings. So I decided to just jump right in and go for it.
How did that conversation go with your wife?
It was actually a lot easier than I had suspected. When we first started looking into multifamily is when we actually came across your course. And at that point, we didn't even know we wanted to get into multifamily. I had been in the single family space for the last 5 years. We do have some passive income coming in off of those, so that helps as well. And just looking for a way to continue to grow our portfolio. So we found your course, took your course, and we did it together. And so our goals aligned.
Right.
We made sure that we talked about what our end goal was and that we were in alignment. And I think that's really important, is just making sure that you lay it out together. And so when the time came and we just decided to do it, and it was a very easy conversation.
You said there was alignment and you had an end goal. What was that end goal? What did you and your wife agree on that you guys wanted to architect?
We want to become entrepreneurs, and run our own business and be in control of our own time and create enough passive income to be able to do whatever we want with our time. Whether that be giving back or traveling the world or spending more time with family, all those three things are kind of on our vision boards. And so when you have those alignment of goals, it's really easy to start making decisions. And after we went through your course, we decided that multifamily was going to be the vehicle for us.
So you decided to kind of go all in and go full time. You had some savings. You had a wife who was supportive, which is great. And then then you started a podcast. You did a meetup as well. And what started happening when you started focusing full time on this stuff? What started happening after that? Was it a good decision? Was there do you think it was did you second guess yourself? What happened after you decided to focus full time?
I think the first 60 days was definitely some second guessing and just really getting comfortable with becoming, in control of your own time. I had been in the corporate world for 15 years. And so going to work, there was always something to do, whether that was my boss telling me I had to do it or whatever it was, but there was more structure. When you're running your own company, you make the decision on where your company is going to go and what you're going to spend your time on. So really transitioning into that was a learning curve. But quickly we found that it was worth it. I was able to, visit the markets on a weekly basis whenever I wanted. So the deal came across my desk. I could underwrite it right then and there. I wouldn't have to wait a couple days until the weekend, and I could drive out to the market and be there the next morning. So once we started doing that, the brokers and, everyone in our markets, which is Arizona, it took us a little bit more seriously. It was easier to get meetings and easier to come across more deals.
And why was that? Because you had quit your job? You tell people that you're full-time?
Number one, yeah, I'm full-time, so they take me more seriously. But also, I'm able to visit the markets more often and to get on top of it more often. So, we would only be able to visit the markets maybe once a month, once every other month when we had full-time jobs. But now with my flexibility, I can go out there, any day that I want.
So you educated yourself. You actually came through our course, did some of our coaching perhaps, and you said, hey, multifamily is the way to go. And then 11 months after that, you quit your job, if I remember correctly on that timeline. When did you actually when did you find your first deal from that point forward?
So I quit in November of 2018, and we found this property in January of 2019. So just a couple months later, but it did take us about 4 or 5 months until we finally closed it with negotiations and all that kind of stuff.
That's amazing, right? So you quit your job, 2 months later, you find this deal, and it's not that you were probably analyzing deals before that point, but like you said, you were able. It accelerated that. So, and it's so powerful, right? Because clearly you would have gotten to that first deal eventually, but it may have taken longer. So you get into. Tell us about this first deal.
Yeah, so the way we found it was we were in the market, right, which is another reason why, it definitely benefited that my schedule allowed me to visit the market. So I was out in the market, called all these brokers and said, hey, I'm going to be in town. Is there anything you have for us to see? And one broker said, hey, Kyle, I literally got the keys to this property today. Would you like to come walk it with us? Didn't have any financials or anything, well before they put it to market. And so I got to walk it, and I was the first investor to walk it. And we were about 3 or 4 weeks ahead of anyone else that kind of saw it. So as soon as it came to market, we were able to put in an offer and get it locked down. Yeah.
It's so powerful. And most of I say it's 80%, maybe even more of the deals are half off market or off market deals. And it's through things like this. because you hopped on a plane, which set you apart from 90% of the other buyers on people's buyers list. Well, what do you think, though? What do you think contributed to, why did this broker take you seriously on the phone?
I had been talking to him for 6 months. You
You wore him down.
It took a long time. I have a list of brokers in our market of over 100 brokers, and I would call them every week. I would make 15 to 20 phone calls a day, 5 days a week, and ask if they had any deals and start to build that relationship with them. And for some of them, they stopped answering, and other ones, they started to build a relationship with me. And I just have it now to where there's kind of like the top 5 to 10 brokers that we work with in the market that want to work with us, that are hustlers and the top brokers in those markets. And it was just persistence, to be honest. I just kept calling them, and anytime I would go visit the market, I would call every single one of them, asking if they have anything that we could take a look at.
Don't you think they were annoyed by you calling them constantly?
Yes.
And?
Yeah, and nothing. It's just the way that it's got to be until they understand that we're serious. I mean, in my heart, I knew I was a serious buyer and that this was a company that we were going to build and be successful at. And so I just had to prove it to them. There's a lot of people from California calling these markets, telling them that they're a serious buyer. But until you can close and show them that you are, it is difficult to break through that veil.
So you were different because you're persistent. You kept calling. You presumably put on a fairly professional image. You were full-time or close to full-time. You had a company, and you hopped on a plane, right? So that combination, by the time you got to that person, they're taking you seriously. What else do you think contributed to the fact that people took you seriously? Because the main concern is, hey, I'm a newbie. I don't have any track record. Why in the world would someone show me a $2, $3, $5 million deal?
Yeah, so I mean, I think it's a combination of things of consistency. We started a meetup over a year ago. We were getting a following with that. Monthly newsletters that would go out, and I include the brokers on those so they can see us being active. We started our podcast, and then also mentorship and coaching. Like I said, we went through your course. We took coaching with Drew, and when you do those types of things, you can speak more intelligently to the brokers. And I just tell them my story. I tell them what I'm doing, my progression. And as the year progressed, they could just tell I became more and more educated, more and more sophisticated. And it's just really keeping them up to date and about consistency and follow up.
That's fabulous. So you hop on a plane, you tour this property. Tell us a little more about this property, which is now at this point off market.
Yeah, I actually drove there. So it was a 7.5-hour drive. We left at 2 a.m. And got there at 9 a.m. So we fly now, but yeah, the drive is a little bit brutal. But it's a 42-unit property. It's 2 miles east of U of A in Tucson, and it's a property that was just mismanaged. It was being run by a single-family home property management company. So one of the biggest line items on their P&L was just the maintenance. Every time someone had a broken door or needed something fixed, they're paying $35 an hour for a service call. And there were 6 down units at the time. This was 12 months ago. So the T12 didn't look very good, but the seller, when she decided to sell, was starting to put some money back into it. So the property was starting to perform a little bit better, but you wouldn't know that by the performance of the T12 because of the first couple of months on that T12. And the biggest thing about this property was there was no way to find the phone number or anything other than by walking in front of the sign, which at the time, the phone number on the sign was incorrect. So I have no idea how they were even leasing up the units. So just that alone was a huge value add.
No kidding. Yeah. So there's definitely a clear problem there that you obviously could solve. Now, did you have a property manager lined up at this point, and what role were they playing in the acquisition process?
Absolutely. So one of the things that we made sure to do was build our teams in both of the markets, Phoenix and Tucson, prior to us leaving. So we had our property management company picked out that we'd been talking to for 6 months, who was touring all the properties that we wanted to when we were out in the markets. And they actually have an in-house GC team as well. So the construction piece was fit. So yeah, absolutely. And they looked at the property, they walked the property with us, they priced out the rehabs, and they comped out the rents. And so we worked hand in hand with our property management team to make sure it was a good asset to purchase.
Now, what about the funding side? What was your intent on the equity? Were you going to raise it or self-finance it? What was your plan there?
The plan all along was to do a syndication and raise it by ourselves. We did run into a unique situation with the lending that I can definitely go into, where we had to switch lenders in the last 30 days and we're able to close, luckily, and it worked out for everyone. But yeah, we were going to syndicate the deal from day one.
At one point, did you start raising money? Like, did you start raising money when doing our contract, or what did that look like? Maybe even before then.
Yeah, so with syndication, it kind of seems like everything happens at once, right? So you sign the contract, you've got to get the attorney, the SEC attorney involved to draft the documents. You've got to wait for those documents to be done. And then we had a webinar about 3 weeks after we had signed the contract, and we started raising money. And we had to use our extension, but basically raise the money in 60 days.
So who did you invite on this webinar? Where does that audience come from? Was it a cold audience? I mean, who was on this webinar?
It was basically everyone we had met through our meetup, people we had talked to from the podcast that had called us, and just by talking to people. I mean, literally for the last 18 months, we had been meeting people one by one or in a group, just telling them about what we did. So that's why we felt comfortable with where we were when I left my job, was we had been building our pipeline and our investor list for 10 months. And up until we started raising it, it had been over 12 months that we were building our investor list.
Aha. So you've been raising money for 18 months preceding this. That's what I was getting to. I knew you would say this. I didn't ask you about that before. So when you're doing all these things, how were you capturing these leads? And did you have a database? You know, how did you do that? Did you have, like, did you build your list? Did you have a spreadsheet? What did you do to build up this list of potential investors so you can stay in touch with them?
So we use MailChimp, and we definitely do our monthly newsletters and things like that. But we also have an investor questionnaire that people fill out. And it's just about, you know, letting people know what you do. I know it may be a little bit uncomfortable for people doing it for the first time, but if you don't put it out there, no one's going to know and no one's going to be interested. So, you know, me and my fiance at the time and wife now just told people what we did and asked if they're interested in it, and, you know, did the meetups, promoted it as much as we could, and just met people one by one until we felt comfortable with our list.
All right. So you have a podcast, you have a meetup, and how do you then get people from this group, either virtual or in person, onto your list? What do you do?
Yeah, we have meetings one-on-one. We call them one-on-one. We ask them if they're interested in. And so we start, you know, we obviously have our main list of just a bunch of people on our newsletter, but we'll move them over to another list as they say they're interested. And we actually use your sample deal package as our first kind of, you know, presentation to each investor, saying, hey, this is what a deal would look like. This is what it could be. Would you be interested in the future? And if they said yes, we would ask them to fill out an investor questionnaire and then move them over to a list of people that are interested in investing.
All right. So you have this podcast, this various things. You stick them on a MailChimp list. You send them a newsletter. And if they want to invest, there's this investor questionnaire, and then you move them onto a different list. And that signifies to you that you can show them a deal. Now you have this. You were doing this for 12 to 18 months, right? Is that what you were doing, and building up this list? Yep, and it's something that you consistently need to do. We're still doing it now, and you need to continue to just build that pipeline, right? So it's definitely a lot of work because you got to move them from one area to the next, but I think that's the best way to do it, and we've been able to build these tight relationships with our investors, you know, to where they're starting to trust us. They understand that we're serious. They see our consistency on our marketing and our newsletters, podcasts, things like that. Okay, that's great. So in the meantime, one of the things I hear a lot is, oh my gosh, what kind of content am I going to put? What am I going to put in my newsletter? Like, who writes that? What do you put it in there? And what is that level of commitment?
Yeah, so it's something that I do myself. I would love to eventually kind of source this out, but it's just something that I've done myself. We've even built an email campaign that's 20 months long. So as soon as you sign up for a newsletter, you get a monthly email on top of our monthly newsletter. And, you know, I just try and educate people and add as much value as possible. I think that's the biggest thing. Through our meetup, through our podcast, through our newsletter, it's all about adding value. And so whether that's why should you invest in multifamily, you know, different things about the markets that we invest in, we try and model ourselves off of people who are already doing it, and we learn from them.
Yeah, that's perfect. So it's definitely a commitment. I know a podcast is a commitment, writing blog posts is a commitment, but like you said, you do it because you're adding value to the investor, right? Because they have questions, they have fears, and you are answering those questions. You're addressing some of those concerns. Over time, then they get to know you and they trust you a little bit more, and eventually some of them will end up investing with you. So that's fabulous. So by the time you had, how much did you have to raise for this particular deal?
Right at $1 million.
Right, that's great. So how many people did you have on your list at the time?
We had about 120 people that we thought could be a potential investor. There was probably closer to 250 on that list. And then we ended up with a total of 25 investors.
That's great. So what was your minimum investment?
35,000.
Okay. Why did you choose that minimum investment versus something else?
I think it was just feeling out our investors. I mean, again, we had them fill out the investor questionnaires and we were having one-on-one conversations with them. Typically, we would have loved to have it at that 50,000 mark so we could take on less investors. But we just knew by the information that the investors gave us that 35,000 or 50,000 was going to price some of our investors out. So we definitely wanted to allow for that. And so we went 35.
So it's great. So you polled your investors, which is really important. And what kind of returns were you projecting for your investors?
Yeah, it's right about 8% cash on cash returns and that 14 to 15% IRR.
That's great. That's great. Nothing crazy. And I'm sure, very pleased with that kind of return. What was the process from the time you did the webinar until closing? What was how did you actually get the investors to write a check or to wire something? What does that process look like for you?
Yeah, so the webinar was a big key to that success for sure, walking everyone through the deal. And what we did was we did a Q&A at the end, and we actually typed out all the questions and the answers and sent them off to the investors as well. The one thing I would have done differently is followed up with each of those investors by phone call the following day. Yep. I did do that, maybe the following week, but we got such a good response via email after the webinar that I thought, okay, the money's just going to start rolling in. And it didn't. And so it took a couple more phone calls. I mean, we definitely had some investors, that invested through the webinar, but I think, it's all about the follow-up. And so it's about walking them through their concerns, any questions that they may have, and taking that time with the investors. So, it took about a month and a half to 2 months to raise the full amount.
All right, great. And how did you spend that time? What were you doing? You were calling them, you were addressing questions. How were you telling them how to wire the money, or what was that process? What did you spend your time doing with those investors during that time?
Yeah, phone calls, one-on-one, answering any questions was a lot of it. Sending, gearing our emails, our monthly emails towards why would you invest in, this market, educating people about the given market, and then really instilling a sense of confidence in what we were doing, because this was our first deal, right? And so along with that, you get a lot of questions of, have you done this before, and why should we trust in you? And so my background was in management, and so I'm all about logistics, business minded, and management and operations. And so I think, once you close on a deal, that's what buying apartments is. It's managing the manager, and it's a business. And so I think that my background fits that perfectly.
All right. So I was going to ask you what your major objections were. You just mentioned one. Oh, you've never done a deal before. Why should I invest with you? So you talked about your unrelated professional experience. How else is that the main way you addressed it, or how did you address that concern?
Yeah, and I have been investing in real estate for the last 5 or 6 years now, not in multifamily, but in single family homes. Also have my real estate license out here in California. So it's not like this is our first real estate deal. It is our first multifamily deal, but we also have mentors and coaches, and, we took educational programs, and we have partners. So all those types of things were the things that helped us get this deal done over the finish line.
You mentioned partners. What kind of partners how did you build a GP team to put your best foot forward?
Yeah, so at first we did not build the team properly, and it was one mistake that I would not make again, is just to have your team set up in advance. This is something that we wanted to do the full raise by ourselves, and we felt that we could, and we communicated that to our mortgage broker, and I guess I was not communicating enough, and I should have done that. And so what happened is that probably 3 weeks in, we were struggling with the raise a little bit, at least in my mind, right? When you're raising money, we want to get to the full amount so we can utilize that capital to execute our business plan. If you can't get to the full amount, you can't execute your business plan. And so at that point, we wanted to bring on partners. And what we were told is it's too late. We've already submitted your application. There's nothing you can do. You've got to go it alone. And so what we did was started kind of shopping around to see if there was any other way. And 29 days to close on our last extension, we found someone that would do it. And we went with a Fannie Mae route. So I had to bring on someone that had signed on Fannie Mae debt before, who had 2 years of prior experience, was able to do that through partnerships and relationships that we built. And we also brought on one other person to help with asset management and raising capital, and we were able to get it done. Now, these were relationships that I was trying to build prior for the last 8 months, and it just so happened that, I needed some help. They helped me out, and now going forward, we're going to be business partners on future deals.
That's great. Is there any way you could have avoided this hiccup with the lending?
Yes, I could have just, through email and through documentation, just told them what our business plan was. Our business plan was always, we're going to try and raise it up front ourselves, and if we were unable to, we're going to utilize our 30-day extension to bring on partners and raise up front. There was some miscommunication where they didn't get that last piece, so they didn't know that I was going to plan on using my extension. So they filed the application with Freddie Mac early, and at that point, all the underwriting had been done, and bringing on partners was not an option at that point.
Gotcha. What was important is that you had an extension, and that was really important. We always have at least one extension, ideally 3. And it's normally for stuff like this around usually the financing. There's some hiccup around the financing always tends to sometimes be longer. So this is cool. So you raised $1 million and you were creative. You had to solve some problems. You had the issue with the debt. It took you longer to raise money. You rounded out the GP and you got it done, which is awesome. And what was after that? What happened after that?
Yeah, so about 3 weeks after that, we've got another property, under signed LOI with this same partnership. So, everyone says real estate's about building a team and about relationships, and it certainly is. And so because we were able to bring partners on this last one, it really snowballed into another deal. And so now we're able to also target larger deals because we just have a larger team. And so, as you say, the law of the first deal, it's tough to know that that's going to happen, but it really is true. 3 weeks later, we were brought an off-market deal. We went out the next day, took a look at it, kind of the same situation that happened with the first deal, and we liked the property, and now we're negotiating a contract.
What kind of size is it? Tell me a little bit about it.
This is a $15 million deal, 128 units. So,
nice.
It's much larger than our first deal for sure.
Nice. Are you going to raise it yourself? Are you going to use some joint venture partners, or what's your plan there?
We're definitely going to join up and add a couple more partners on the GP side and make sure that our team, like I said, is lined up prior to anything happening. Right when we get under contract, we'll have our team set in place so we can make sure we can raise capital.
Can your financing broker help you with that and trying to help you structure the GP so that it has a high probability of going through?
Yes, the person who was able to close on our last deal has been a huge help. And I've learned a lot going through the lending process. I think there's so much that you just don't know until you go through it. And that was the case with the lending process. So we've got a good partner on the lending side that now helps us through that and make sure it's structured properly.
That's just awesome. So when do you intend to close on this?
We're hoping first week of September right now.
That's awesome. That's fantastic. So what are some of your lessons learned from all this right now?
Yeah, so definitely I think when raising money, you want to at least double the amount of investors you think you're going to need. So I think that and what I mean by that, if you think you can raise $1 million, it's probably going to be 500,000. So if you need to raise $1 million, have $2 million in the pipeline, and always be raising money, always be trying to add new investors to your pipeline. And then definitely make sure that you're transparent with your lender and setting up the team far in advance to make sure you have the right partnerships to get a deal closed.
How have you been dealing with, getting out of your comfort zone, right? Because let me ask you this, 128 unit, okay, that's pretty big, but $15 million deal. Like, did you in your mind 12 months ago, 18 months ago, imagine that you would be taking a swing at a $15 million property?
No. And at this point, I'm really big about getting out of my comfort zone. We started a meetup, we started a podcast, I left my job. These are all things that, even 18 months ago, I never thought would happen. And now it's something that my wife and I do every year, is try and do 2 or 3 things that takes us out of our comfort zone, because we know by doing that, is even though as uncomfortable as we are, we're going to grow from it. And so, it's kind of that ready, fire, aim type of mentality. But we'll figure it out, and no, I never thought that I would be able to take down a $15 million property, but now we're even thinking, hey, why not 20, 25 million? Because you start to build that confidence, you start to build those relationships and those partnerships that allow you to do those things.
All right. So what's the advice of trying to get outside your comfort zone? Are you developing this mindset of, ready, fire, go, right? Which is great, but there's a lot of fears associated with something that's uncomfortable. Like, oh my gosh. Like, for example, let's pick one. Let's pick, your podcast, for example. Why was that outside your comfort zone? What were your fears around that?
I have always been someone that's been an introvert and do not do well speaking in front of people. So it even goes back to the meetup. I just remember starting the meetup and, thank goodness my wife was with me on that. So I found someone else that could help support me. And so I would suggest that would be my advice, is if you can't do it alone or you don't think you can, find someone that'll do it with you. And so having her there as my support system was really beneficial. But I remember our first meetup, I was freaking out. I couldn't speak in front of the group, and having her there was a huge, huge positive. But from that, I now can speak in front of people, and I've gotten better and better, and it's been 18 months now. And so, I'm a lot more comfortable in that area. And it same goes with the podcast. Our first couple podcast interviews were, they were horrible. But as you do it more often, you just build more confidence, and you learn how to improve, and you just do it. So getting out of your comfort zone is not a good feeling at first. And now it's something that I really love doing, because I know it just grows us to the next level.
I was going to ask you what you would do differently to accelerate this timeline, but I think you've really accelerated your timeline a lot. Specifically by quitting your job, getting the education, and then building a platform, right? Those in my mind are the ways to get to where you are right now. What is in your mind? What's kind of if you were to sit someone down and say, hey, here's where you were 18 months ago, 24 months ago, someone wants to do what you're doing. What's the blueprint?
Yeah, finding a mentor for sure, and one that fits your goals. I think that's the biggest thing. Is there's a lot of mentorship out there, and everyone does it a little bit differently, but ultimately it's the same type of coaching, right? And I think you need to find the right person that fits your goals. So understanding your goals first, and then just taking action on them. Have a plan laid out, 90 days, 6 months, 1 year, and execute on those. And then the other thing I would say is just building partnerships. I mean, those are the key things that help you accelerate your growth. Find someone that is doing what you want to be doing, and really tag on to them and learn from them, and learn from their mistakes and what they're going through.
Yeah, it's awesome. It's great just to watch you, come in a very short period of time, having this kind of platform, raising this kind of money, and going after this kind of deal. It's just so awesome. Kyle, how can people connect with you?
Yeah, sure. So we also have a podcast, like Michael mentioned, Passive Income Through Multifamily Real Estate. So definitely check that out. And you can reach me on my email is kmitchell@limitless-estates.com.
Awesome. Kyle, thank you for being on the show. You're going to inspire thousands to do the same thing that you've done, just taking action, getting some education, not hard to do, and then just building a platform the way you did. So thank you for being here.
Yeah, thanks for having me, Michael.
So I'm really super excited about Kyle. And I think he talked about mentoring and education early on. And I do think, and he would agree with me, that everyone with enough persistence will achieve their goal. But man, he's crushed it in 18 months. And I think when you line yourselves with mentors, he worked with Drew Niffen. He's now president of Nighthawk. And Drew was one of our earliest coaches, super, super experienced guy, and really shares my passion in helping people. All of our mentors do that. They're all full-time investors. And I don't think you'll find a single program out there where every single mentor coach out there is a full-time investor. That's all they do. And it's just really exciting that he just basically did what we told him to do. Get your education, get out there, start analyzing deals, start building your platform. You have to attract people to you. And a meetup is a great way to do that. A podcast is a great way to do that. A book is a great way to do that. So just pick one thing and do that first. In this case, he did a meetup first, okay? You're just going to meet up, and it started off really small. There was like a handful of people that are like, I'm wasting my time. No, stick with it. Stick with it, right? Then once you have that and you have a rhythm going, then think of something else. What can you do? Is it a YouTube channel? Is it a podcast? What do you love to do? Do you love to be on video? Do you love writing? It might be an article, right? So what kind of content can you put out there where you can attract people to you? And that's really what it is you're attracting people to you, and they want to align themselves with you to get to know you a little bit more, to earn your trust. And that's really how you attract investors to you. And as a passive investor, you want the same thing. You want to know about this person that you're about to invest with. What are they like? How do they deal with challenges? What are their goals? How do they deal with setbacks in the past? And these things all come out when you meet them at a meetup or they're talking to you on a podcast. So it's important that you build this platform, right? That's how we attract capital as well. So anyway, I hope you found that really, really valuable. We talked a lot about that at Dealmaker Live. We talked about building your brand. So you as a real estate investor, you're thinking, well, I'm buying and selling maybe properties, but no. You are, but you're really building a platform, a brand, right? And it consists of all these things we just talked about. So we talked about things like creating a podcast, like a meetup. What's it like to write a book, right? How do you create a website? How do you capture leads? That was a core theme at Dealmaker Live, right? So we talked a lot about that. And I want you to start thinking about that in the same way when you approach your syndication business or your capital raising business, is building your brand. All right. So if you're interested in investing with us, for example, with Nighthawk Equity as our investment company, go to nighthawkequity.com. And just click the join button. That puts you on. You can schedule a call with us. We'll get to know you a little bit more, and then we'll be able to present you with some opportunities. If you are interested in mentoring, kind of what Kyle did, you can go to themichaelblank.com and /mentor, and you can also schedule a free call with us, and we'll explore whether mentoring is right for you. And I do believe that it'll definitely accelerate your goals, allow you to do bigger deals faster, and avoid some of the expensive mistakes. And you're working with one of our full-time mentors. It's a real privilege to know this group of guys right now. So anyway, hope you enjoyed it. Hope it inspired you to take action. And we'll catch you on the next episode. All right. I hope you enjoyed that. Now, as the next step, download this ebook right here. Okay? When you've downloaded that, make sure you also subscribe to my YouTube channel, because then you can get all of the videos that I release as soon as I release. So make sure you subscribe to the YouTube channel right now. Click on that right now. And then also make sure that this is the next best video to watch is this one right here. So hope you enjoyed that. I'll catch you next time.